Hi, dreamers. Lately, it does seem like I've had a crystal ball. Is it luck? Perhaps. But either way, it's interesting to review the predictions, the changes I've made, and how it's turned out. Reflecting on this is all about learning so that I, and maybe you, can better predict and adapt in the future. Here are some of my past predictions that came true, and some for the near-term future. The first major macro prediction was when I went 100% to cash in 2019, as I was predicting a major catastrophic event. And civil unrest, nuclear and/or global war, and pandemic was on my bingo card. The reason was the unpredictable leadership of the US in the last cycle. We ended up having 2 out of 3 on that bingo card, and hence the crash of 2020. So that one panned out, and I put all my money back into the market near the bottom. The second prediction was that retail investors and analysts were driving up the prices of growth stocks to a breaking point. So back in November, I started selling things like my Netflix stock, my Shopify stock, and a slew of other non-dividend paying stocks. That one also turned out to be true, and I was able to gain capital to drive back into my dividend stocks. My third prediction was that inflation, and therefore interest rates, was going to get out of hand quickly. I thought this because the conditions were perfect for it. Low supply due to jostling of chains in the pandemic, followed by high demand due to cash stocked away during the pandemic. Add to that stimulus and simply opening back up, and you've got the recipe. You may have noticed I sold all my bond ETFs to quickly exit earlier in the year. The Fed always will use interest rates to try to tame inflation. So I also locked in a 30-year refinance mortgage of 2.875, and this prediction has definitely panned out. Another prediction widely out there was that the total stock market had become way overpriced. So you've seen me quote-unquote optimizing since January, and I've mentioned several times that I haven't put one additional dollar into the market. That's me saying, hey, let's lean into a more defensive posture. So how do I play defense instead of offense? Well, by selling non-dividend producing assets when they come up, like WBD, which I sold at $24 and it's now at $14, and then creating those bigger positions in high-yield dividend payers like BTI. I also took down my financial and banking exposure in the last quarter and got some questions when I sold JPM at $155 back in February. It is now at $115. In fact, if you look at my stocks through this lens, you will see a very defensive portfolio. I'm not on offense at all. I even exited all European holdings except for BTI, and focused much more on Canadian stocks due to the stable nature of the regulated industries. And finally, in my May video, I predicted a near-term dead cat bounce, which we just saw this week. That's where a rally is followed by a steep drop. So with all of that said, what are some future predictions that will determine my moves? Well, I think things will get a bit worse before they get better, and that we're likely due for another 1 to 2 drops before we level off and return, ultimately, to an up and to the right stock market. Now, those drops might happen in September or October, but I don't think the drops will be as big and severe as what we saw in 2020. What does that tactically mean for me? For one, it continues to mean have cash on hand. Primarily, I'm doing that through raising capital with the sale of other investments. To me, it also means that growth stocks may not move very much for the next year as we head into a sideways market. So one move I made based on that theory is I sold over $10,000 of Amazon stock at $128 on the split date, and have since driven that money right back into my defensive stocks like BCE, BTI, MFC, and AQN. The Amazon price is now at 104, and I also predict that Amazon may have some tough quarters ahead due to a slight drop in shopping and perhaps some backlash with rising prime costs due to the rising shipping. You'll also likely see me take small positions back into things like BBN, and new things like BST. That's just me prepping for the eventual turnaround and staking ground in order to watch for signals that we're almost to a bottom in the future, and that may be in about 6 months to a year. I also predict we're going to have a decline longer term in oil, but I'm not sure if that's going to be in a year, sooner or later. I think this because EV cars are starting to sell off the shelf. The short-term supply issue will wane, and then there's going to be a slow decline in demand over time. Again, I think oil is needed and will be around for a long time. So many things are made with oil, but it's more about what will investors do that first quarter or year where there is a strong indication that the peak has occurred. I think that's when the price will absolutely tank. So I've recently been taking some Exxon and a little Chevron and putting it in other places. In terms of real estate, I don't think we'll have a widespread crash because I think there is plenty of pent-up demand from years prior, and it's going to be tough for builders to catch up given all of the supply issues. So I actually anticipate the cost of housing to soar for a while. And finally, I think there's a huge potential for the deregulation of cannabis and for tobacco companies to reap the rewards of that change. Now, I just want to reiterate that I am a long-term investor, and although I'm making tweaks, you'll notice that my core investments and core strategy remains the same. Dividend stocks of companies with wide moats, limited or regulated competition, and a long history of paying, and then diversifying that mix. All right, I hope some of those predictions were interesting for you. Thanks for spending time with me today, and as always, I encourage you to do your research and then implement and learn by putting them into practice. And as a reminder, I'm not a financial advisor, so keep in mind these videos are for entertainment and inspiration only. See you on the flip side.